So it was a day of recovery for the Indian equity markets. We are looking at the Nifty month futures daily chart, and the index bounced back really well, reclaiming the psychological 17K mark with 245 points gain in today's trading session. The participation from the large cap stocks were pretty impressive, barring Maruti and TCS, which closed marginally negative. Most of the stocks participated in today's bounce back. We still continue to see that it's the Nifty which is gaining relatively much more in relation to that of Bank Nifty. If we take a look at the sectoral performances, you will notice that all the sectors gained pretty decent in today's trade. The small caps and mid caps also participated. So overall, we can term today's move as a good, healthy bounce back. Let's talk about levels. Then we will talk about what kind of an approach we should have for the next three trading sessions this week. And we'll also talk about a stock which looks like make or break at the current juncture. So Nifty has been volatile. When I say volatile, I mean that the choppiness, the bounce back, the giveaway of the bounce back, and again the bounce back, it makes life a little difficult because there's lack of sustained trend. So are we looking at this consolidation post this correction? Well, it seems so far. When the first bounce back came, which was this one, the index managed a high of 17,439, let's say 17,450, 500. 17,500 is a nice round number. So unless this previous swing high is being comfortably taken out and sustained, one should consider this as a consolidation post this correction, number one. So it has a little bit of bearishness in it. We can see very clearly that the moving averages are slowly but surely turning down. But moving averages react to change in price, so it's a derivative of price. And so we will consider them this shift of the slope of the moving averages as the early signs of a probabilistic sign of weakness. But will today's bounce back sustain or not? That's an important question. If you take a look at the 75-minute time frame, what we had yesterday, what we have today, there's not much of a difference. It looks very, very similar. Yesterday it gapped down, post which it stayed range bound. Today it gapped out, post which it stayed range bound. Then towards the later half, it picked up some volatility and momentum. And then towards the end, it bounced back in both the trading sessions. The 75-minute time frame is too in a well-defined downtrend, by the way. So it will not be wise to say that today's bounce back has led to a trend reversal. I don't think so at all. And neither should we say that this is going to be a dead cat bounce and the market's going to crash in the near future. So we are in kind of a stuck kind of a situation where the overall tendency of the market is mildly on the downside. This is it. But we have seen some good participation from few large cap stocks like Reliance Industries, where you can see that when a stock like Reliance rallies significantly like this and scales above its previous highs, it gives you that kind of confidence that the market is trying its best to bounce back. So it's got some participation from odd stocks, which matters to the index. But overall, this is the situation. The Bank Nifty is in a similar kind of a fix. It has a bit of divergence based on which it is offering us this short-term bounce back. But the underlying trend is definitely surely tilting on the downside. We have a bounce back. In fact, you remember yesterday the bank Nifty performed much better than the Nifty. And today it gained, but towards the later half, it actually gave away. If you take a look here, these are the 5 bars on the 75-minute time frame. The index is still very much in a downtrend. So what I mean over here is, for anyone to go strategically bullish, this is not the right time and place and price. We should ideally wait out. There's no harm in landing up buying a little higher, but the confirmation or the confidence needs to come back to both the Nifty and the bank Nifty on the daily time frame, which I think at this juncture it is still missing. The sectoral indices played a pretty decent role. Few of them are still in a downtrend and giving a bounce back, like the CNX IT, the CNX real estate, the service and the finance. These are predominantly on the downtrend, giving a bounce back. Most of them on the others, like the energy and the oil and gas, thanks to Reliance, are performing really well. FMCG, thanks to ITC, is holding pretty well. So, and by the way, CNX Auto is also a pretty strong sector which has given a short-term breakout. So you have Hero Motoko, Maruti, and stocks like M&M which have been performing well. So we are in a crux wherein one pocket, couple of pockets of the markets are doing good, but it's counterbalanced by the others who are not doing so great, and so the underlying trend is not that well defined. If we take a look at the global markets right now, it's 27 minutes past 8 p.m. tonight on the 26th of April. We are not looking at a healthy US markets. US markets are majorly negative, 1.5 to 2.5% negative. Nasdaq is down 2.5%, whereas S&P 500 is down a little over 1.5%. It means that yesterday's bounce back turns out to be more like a dead cat bounce. These are primarily called dead cat bounces, wherein after a sharp fall, the market gives a sharp bounce back and post nears the high of the day and brings in a lot of confidence and feels like, wow, what a bounce back, just to disappoint you the very next day. So if we have a close near about here or below yesterday's low for the S&P 500, and we don't see any kind of intraday bounce back towards the later half for the US market, then this is definitely a dead cat bounce, which means that further downsides can definitely open up. Crude and gold, again, after that short-term correction, is picking up. Nothing much happening there, but gold relatively seems much more bearish than that of crude. We did talk about these support levels for both the asset class in yesterday's video. SGX is down 150 points, and this is frustrating. Feel free to add any new words. Not slang, please, but you can use any word of your choice, how you feel being a part of a short-term trader, being a part of this kind of a market. I think from my end, I'll use the word frustrating, because yes, if it gaps down 200 points, gaps up 200 points, gaps down again 200 points, so it becomes really difficult to catch on to a trend and create some overnight positions. Intraday is fine, but positional traders will feel a little bit of difficulty in this kind of market. So we'll see. It's again teasing and testing out the psychological 17K mark again. And so if these lows are broken, if it gets broken, that won't be very good news for the overall market. So let's see. As of now, 8:30 p.m., 150 points, 155 points down Nifty. US markets deeply in the red. So what's in store for us tomorrow morning needs to be seen. But now I would like to talk to you, share with you one stock which I find interesting. Asian Paints. Now, we all love Asian Paints. It trends well in either direction of the market. It's a beautiful institution favorite. It's a wonderful buy and hold long-term portfolio stock also. It has characteristics of a very good trading stock also. So it's a good company, it's a good stock, it's fine. Of late, it had felt the heat due to the rise in the crude prices, post which it went into a consolidation. This is the one. And very clearly, the crossovers of the moving averages have been very, very frequent, which has failed to give the chart a sustained trend. So why do I like this? What I am closely observing, or what I feel the stock is about to do, is give us a couple of days of a sharp move. Post this sell-off, this is the bounce back, which is decent, and post this 3-day bounce back, this is the 2-day correction consolidation. So generally, okay, if I bring in volumes, if I bring in volumes, I do notice that the last 2 sessions wherein the price was completely stuck in a range, the volumes were marginally higher than the 5-day average. This line is the 5-day average. If the volumes were really low below it, I would have probably had a chance of an upside breakout. This rising volumes actually brings in a little bit of doubt whether this uptrend, this 3-day move, will sustain or not. So essentially, bottom line of the story is it's a breakout candidate. It's a make or break. And you can use this low and this high as the make or break, upside breakout or downside breakout. Taking a look at these volumes, I really think that the stock is probably going to open up on the downside. I might be wrong, and I don't mind if it opens up on the upside. Because if I show you the 75-minute time frame, and if we drop, let's say, a volume profile of this leg up, post which essentially it consolidated. So point of control and most of the volumes are in this region. Of course, a volume profile from here to the current price will lead to a point of control somewhere here. So there's no doubt about it. And we do see some volumes happening up here as well. So yes, make or break, definite. I think there's no doubt about it. On the upside, this is the breakout that you're looking at. It's just this high volumes which brings in a little bit of doubt in my mind that which way will this stock open up. If it breaks below yesterday's low, which is 3095, this is the cash market chart, then we can get a follow-through movement on the downside from this nice trending counter. Well, that's it from my end tonight. 350 points down Nasdaq, 147, 150 points odd down SGX. We had a good day today. Let's see whether we have a good opening in tomorrow's session or not. Not to forget, Thursday is our expiry of the derivatives contract, so we'll keep that thing in mind. Take care of yourselves, traders. Trade well and trade wise.